Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. The title of today's show is Healthy Correction or Doomsday Scenario. Which one will it be? I'm going to share a case for both and share my thoughts on the latest price action charts, a whole bunch more. Before we do that, smash the like button. This does help get this channel out to more people and, of course, does help support the channel, as does your wonderful comments that you take the time to write. I take the time to read them and respond. So first of all, we're just going to jump into a little bit of news. And first of all, we have the CME gap. Now, the CME gap here is, first of all, we have two. One that hasn't been filled yet, another that hasn't been filled, newly created above price. So you can see here on this particular chart here, the CMA futures chart, and I'll show you how to get that chart, but you can see that there's a little bit of a gap. And so the first gap is around about between 96,000, it's quite a small one, up between about 96,400 to 96,900, okay? And then there is one, it's also quite small, below price, and that one is between about 91,900 to 92,700. So of course, either one could get filled, and it wouldn't really lead me to believe one direction or the other. I am a little bit short-term bearish, but long-term bullish. So I am going to play my hand early in this video to share, that this could be the scenario that plays out first, that we come and get that lower CME gap first and then go up and get the one that was created above. But I don't see any problem with the one just nipping up above a couple of thousand again to get that one above and then coming down, a bit of a fake out and then a shakeout down here and then a breakout, fake out, shakeout, breakout. That could also be something that happens as well. There is also a key fib level around that 92,800 level, and we've already tested that and it's bounced off there. And so that would have been a nice little bit, a nice little area there. So that would be something that we need to just have a look at there and see what happens first, whether we go up first and down, or then down and then up, okay? So let's have a quick look at the Bitcoin charts here. Over here. And by the way, if you do want to find the CME, so if you'd like to find that ticker to know what the CME futures is going to be, you would simply just go to BTC 1 exclamation mark. Now you need to be careful. You've got all. If you just have crypto selected, it won't find it. And then you would click on their Bitcoin futures there. And that's where you can see there is the gap that was created there. And there is a very small gap above there. And generally speaking, as we know, gaps tend to get filled. There was a gap created there. And as you can see up, got filled that gap before coming back down. And then there was another gap here and that got filled. And you can see all these gaps, then another one created, just gets filled. And so I would expect both these gaps to get filled sooner rather than later. So that's how you would find the CME gaps. Just make sure you add that to your list, on your watch list, and you can keep an eye on that. Okay, so we're looking at Bitcoin right now, and we're currently being held up by the Fibonacci here, 94,160. That's a key level that's held there. You can also see this 92,800 level that's held. And of course, just below that is our fair value. We do have a fair value gap as well, by the way, between 88,000 and 91. So there's a fair value gap here. Now, those often don't get filled right away. They could take some time to get filled. They could even take a year to get filled. So I'm not as focused on that, but if we do come around that area, that's just in this area between $88,000 to $91,000 area, just in here, okay? So we also have the 20 EMA on the daily, which is right below. So look, even a wick down there, like we saw this big wick down, and it got bought up, and then we continued. Now we did get a little bit of a bearish candle close there. This is not as bearish because of the long candle there, but we do have a top tail there. So pin bar candle, there's a lot of sell pressure to the downside, and obviously we've seen that continue. And so the weekly close was a touch bearish, but not terrible if you look at it. Again, there we had that long candle there, and now we're seeing, so that is a bearish candle, and now at the moment we're seeing a little indecision in the market. And I think that indecision in the market is fueled in part by the Fed. The interest rate hike decision is forthcoming on Wednesday. The market is pretty much pricing in 90% plus that rates will stay unchanged, and that would make sense because the CPI for April doesn't even come out until a week later. So I think it's more likely that we get a rate cut in June. And I'm not saying there'll be one in June. We've got to see what May comes out. But I think people are more worried about what Fed Powell is going to say. He's being thrown under the bus a fair bit by this current administration, and he might come out very guns blazing and very hawkish, or will he come out dovish? And so that's, I think, what the market is bracing for, and that's why we have a lot of indecision there. And I think that's why a little bit of a temporary pullback, that people want to lock in their profits before he gets to talk. Because generally when he has talked, the market does tend to dump more often. That has rallied to the upside, of course. But the 20 EMA on the weekly time frame, if we look at this is a really key metric because we're above that, and that's down at 88,000, which is down around near our fair value gap, and would also fulfill the CME futures gap being filled. But a healthy correction at this point, when you think of the parabolic move that we've had from 74,000 all the way up to 97,000 with barely a breather, is kind of normal and nothing to be fearful of. But the 20 EMA on the weekly, when this is angling up and price is above that, the bulls are in control. When it's angled down and price is below, then the bears are in control, and you can see what happened there. And of course, this just turned into a buy the dip opportunity, but of course, this should turn into a sell the rip opportunity. And so hopefully you have been locking in your profits. So that's very important. So it'll be interesting to see what happens there. We've got the CME gap, we've got the Fed funds rate, and then of course we have CPI data coming a week later there. We've got the fair value gap down below. And then, of course, we have where we had the bear moon that printed, but I did cover that. But the bear moon usually lasts for 14 days, and generally speaking, in a downtrend, I've generally found the bear moon to have quite big drops, but significant enough drops. But with the when the market is in an uptrend like it is now, it tends to either move sideways or the drop offs are a little bit smaller. It'll be interesting to see what happens there, but you can add that indicator to your, you can go into here and just type in bear moon, I think moon phases it's called actually here. There it is, moon phases there, and you can actually have a look and see that bear moon printed. Look what happened when the bull moon printed, and again, when the bull moon printed up there and big upside and the bear moon, and so we're just seeing more a little bit of a down and sideways action, which tends to be what generally I have found to be the case when the market moves from a downtrend to an uptrend. Now, also a very, very important note as well is we have decreasing volume. So this is also what leads to the pullback. And I did share this in another video as well. You can see we've got decreasing volume. So this pump was off decreasing volume. So it was only a matter of time where the gas was going to run out and there was a bit of a pullback. But we also see that in the SPY. We see the pump off decreasing volume there. And I did my stock show yesterday, so I'm not going to go into the SPY here, apart from the fact that I did give the buy signal down here at that 480-ish area, and that it has done an incredible gain. And I'm looking for the 200-day moving average or a break above that. There. So for the SPY, but see my stocks on Sunday video for more of an update on that. Now, another chart that some people just don't really keep an eye on is the USDT dominance chart. Now, this is a very, very, very important chart. And the reason why is because generally when this is down, Bitcoin is up. And we have been trading in a little bit of a channel here. And I want to identify that for you here. And we're going to create some trend lines here for you so we can see this and track that at around the just over 5%, probably about, yeah, let's have a look at this channel here. It's been trading in just recently, right about where it's at now, actually. I'm going to put here at about this level right here. And you can see that it's been trading quite beautifully in this little channel. It's dropped down, and look how it's trading in this channel here. Now, of course, this is obviously something that you can't trade, but then the bottom of the channel there would be around about, I'm going to put it about 4.96%. And so what you can see here is that it wouldn't be unusual if this rejected here and then we came back down to the bottom here and then Bitcoin price was to accelerate to the upside, because when USDT dominance usually drops, Bitcoin will pump. But what we have to look out for here is if we break out of this channel, and you can see that we were trading in a separate here, the lower part of this channel that we see here, but really we're part of this bigger channel to the upside where we've had the 200-week moving average that is here at about 5.67%. So keep an eye on that, because if we do see a break above the 20 EMA on the daily time frame there, and we don't often chart this as much as let's have a look here. We'll just pop that in there so we can see that there. And then we see that we got rejected there also at the 50 EMA on the daily as well. So that can kind of lead us to show, well, where are possible areas where it could get to and then break down from, and Bitcoin will usually follow that price. So again, USDT dominance goes down because what? People are using the USDT to buy more Bitcoin, okay? And so in doing so and buying more Bitcoin, they are actually selling their USDT, and which is why the dominance drops down. And so this is, we love to see rejection here. We're pretty much right at it at the moment, right below it. You know, I might actually remove this trend line because I think the 20 EMA on the daily actually is providing it enough, although this candle came up here a little bit short of it. So we really are at or around that line or rejection there. Otherwise, if we do break out from there and we move up to the 50-day moving average, and this is where I think I'm short-term bearish on Bitcoin, and we fill that fair value gap, possibly, or at least fill the CME gap down there at around 92, maybe 88,000, 90, 92 area. That's what I'm looking between 88 to 92,000 area pullback. I think would be very healthy, and that would probably lead USDT dominance going up to around the 50-day moving average up or around this area, and then maybe creating and then breaking down from there, rejecting again from there, and then breaking down a little bit lower. Of course, we could just pop around this area, reject here, and then capitulate lower to the downside, and maybe all the way down to the 200-day moving average would be beautiful. We'd absolutely see Bitcoin and some altcoins pop from there. So that's what I'm looking for at Bitcoin at the moment. Those are the levels that I'm looking at there. So possibly some short-term pullback. Of course, as always, we're looking at the bigger time frame as well. We do not want to see the blue line cross below the red on the weekly stochastic RSI, and we do not want to see the MACD. And I've shown this before on the monthly time frame, and we're not close to that at the moment, so we don't want to see the blue line cross over the red on the monthly. Those are the two big things that would be big warning signals for me, and I would be looking to most likely exit the market at those points. But we are not at that place yet for either the stochastic RSI on the weekly time frame or the monthly MACD. We're not close there either of crossing over as well. All right, well, that's all I have time for today. Again, as always, thanks so much for tuning in. And of course, until the next episode, happy trading.